Global stocks rose Wednesday, even as new inflation data gave investors another reason to worry. U.S. producer prices rose more than expected in April, marking their biggest gain since early 2022. That came one day after consumer inflation showed prices rising at the fastest pace in 3 years. The main driver is energy. The Iran war has pushed up oil and fuel costs, and those higher costs are now flowing through the economy. That is the part normal people feel first. Gas gets more expensive, shipping gets more expensive, businesses pay more to operate. Eventually, consumers see higher prices again. Normally, hot inflation would scare markets because it makes the Federal Reserve less likely to cut interest rates and more likely to keep borrowing costs high. That is why bond yields stayed elevated and the dollar hit a 2-week high. But stocks still moved up because investors kept buying technology names, especially companies tied to artificial intelligence. The S&P 500 rose, the Nasdaq jumped more than 1%, and chip stocks bounced back after weakness the day before. So the market is basically split in two. On one side, inflation is heating back up, oil is still above $100 a barrel, and the Fed may have less room to help. While on the other side, AI enthusiasm is still strong enough to pull major indexes higher. Investors are also watching President Trump's meeting with China's Xi Jinping in Beijing. Trump brought NVIDIA CEO Jensen Huang and Elon Musk with him, and markets are hoping for progress on trade, business access, and maybe even some movement on the Iran crisis. But expectations are cautious. A productive meeting sounds good, but actual results are harder. For now, markets are rising because tech is carrying the mood, but the inflation problem is not gone, and if energy prices keep feeding into the rest of the economy, Wall Street's AI optimism may run into a much harsher reality.